All right, welcome back. Now we are to the income tax portion of our input. So the problem says, let's see, our regular, oh, here we go. An estimated income tax payment of $14,000 will be made in June. So income tax payment, 14,000. And let's look at we have a quarterly dividend of $5,000 that is expected to be declared in June but paid in July. Paid dividend in July. It's 5,000 there. So let's see where that gives us here. In income tax, we should have 14,000 here in June. Dividends, we should have 5,000 here in July. Now let's figure out what our total cash payments are. I'll do sum there. So these should be our total cash payments: 45,400, 64,500, and 66,500. Let's make sure that we are still on track here. Something is wrong here. Okay, so let's see. If we got everything else right, what did we, oh, the capital expenditure. So let's go ahead and copy that line down. We'll put it here. We need 146,500. Can't forget about whatever fixed asset we're buying there. So let's just make sure we're correct there. Perfect. Okay, so now we need to look at whether we had a cash increase or cash decrease. So these are our total cash payments, and these were total cash receipts and payments. Okay, so if we do equals total receipts minus total payments, will give us our net cash inflow or outflow, right? So our cash increase or decrease is 31,600 for May, 2280 for June, and negative 5780 for July. So our cash at the beginning of the month, well, what does it tell us? We start the month with how much cash? We started with $33,000 of cash. So 33,000. So our balance at the end of the month, beginning cash, 33,000. Ending cash, we'll do this, will be 64,600, and that will be our beginning cash for the next month, and so on. So our cash balance at the end of the month will be 64,600, which is going to be our beginning cash for the next month. If we do our math there, we'll get 84,880, which will be our beginning cash for this month. And we end up with 27,800. Remember, our minimum cash balance, I believe that they want is, where did it say? Well, we desire to maintain a minimum cash balance of $30,000. So if we put minimum cash balance, that should be 30,000 across the board in Cengage. I missed a zero there. So then 30,000. So we'll either have excess or deficiency. We'll take ending cash minus minimum cash balance, and that gives us our excess or deficiency. So our excess in May is 34,600. Our excess in June is 54,880, and we have a 2,200 deficiency in July. So let's go ahead and check to make sure we got all that information in there correctly. Perfect. So this problem isn't extraordinarily difficult. It's just a lot of information to process and understand exactly what it's telling you when we're going through this, especially the non-cash items that it highlights here, exactly how we're collecting our AR and paying our SG&A expenses, etc. So then if we look at the little word problems here, we get the budget indicates that the minimum cash balance will not be maintained in July. This situation can be corrected by borrowing and or by the sale of our marketable securities. Remember up here it told us we had $40,000 in marketable securities. Those are like stocks and bonds, so we could actually sell those to maintain our minimum cash balance if they're held for such purposes. At the end of May and June, the cash balance will exceed the minimum desired balance. So those should be our answers there. You guys could have done that, but it's okay to walk through it. And there we go. That's it. So this problem is a little bit tough, but it's not extraordinarily difficult. I hope this little walkthrough helped you figure out how to follow that through. Let me know, please, if you have any questions, as always. Email me or post in the Facebook group. And I hope you have a good week. I hope you're blessed this week and you feel confident and ready for the final next week. If not, once again, please let me know. Have a nice week, and I will see you guys next Wednesday.